Welcome to the WTR On the Horizon podcast. I'm your host, Tim Gerdeman, Vice Chair and Co-founder and Chief Marketing Officer of Water Tower Research. In today's podcast episode, I am joined by Ardes Johnson, CEO of NeoVolta, NASDAQ ticker symbol NEOV. Also joining is my Water Tower Research equity research colleague, Eric Goldstein. NeoVolta has been executing on a strategic pivot from a residential battery vendor into an integrated energy storage platform with a transformational U.S. utility and C&I-scale battery energy storage manufacturing joint venture called NeoVolta Power. The joint venture is targeting 2 gigawatt hours of initial annual capacity, scalable to 8 gigawatt hours, with equipment commissioning targeted for completion by the end of August and ramping into 2027. Excuse me, gents. The company has also secured a non-prohibited foreign entity determination supporting the JV's FEOC compliance. It has raised approximately $28 million in gross proceeds in May to fund the build-out, and lastly, describes itself as fully funded through commissioning. Welcome to the podcast this morning, gentlemen.
Good morning.
Good morning.
So, Ardes, to kick things off, a year ago, NeoVolta was a residential battery company. Fast forward to today, and you're standing up a FEOC-compliant 2 gigawatt hours U.S. manufacturing joint venture with a Bloomberg Tier 1 energy storage system integrator and the world's largest solar module and cell manufacturers partners. For an investor discovering NeoVolta's story for the first time via our podcast, how would you describe what this company has become, and why is it an interesting investment entry point?
Yeah, thanks for this opportunity and thanks for the question. I would say that when I came on board in 2024, the company in and of itself was really focused on the residential space. I knew quickly, I have some history in the storage industry, and I knew quickly that I was wanting to look at other verticals to get into. So we were looking into the C&I space, which is a natural progression for most residential companies to move into. During that research and study and looking at companies and talking to potential partners, the new regulations and rules from the reconciliation bill, also known as the One Big Beautiful Bill, came out, and it essentially said it was going to prohibit Chinese companies from having ownership and being able to deliver product in order to receive the investment tax credit. We took that opportunity in some of the conversations we were having, and ultimately we're having a conversation with the company PotisEdge, as you mentioned before, a historical Tier 1 Bloomberg integrator of energy storage solutions. We were talking to them very heavily about an opportunity to work together. That ultimately pivoted us into a joint venture conversation of which we would have ultimate control. During that conversation, or actually during the negotiations of that joint venture, LONGi came in over the top and acquired 60% of PotisEdge. LONGi is, as you said, is arguably the largest solar cell and panel manufacturer in the world. And much like other large solar companies, they have a definite interest in getting into the storage game. And above and beyond that, they have a big definite interest in being in the United States. So that opportunity and that conversations and that timeline really allowed us to get to where we are today. And in that development, it went from beyond just the C&I conversation into utility scale and C&I. And that's led us to getting from where we were a year ago, a small residential company doing annual revenues in the $8 to $10 million range, to where we're going today, which is putting this facility in place and having it come live this year and starting to sell product into a really growing market that's going to accelerate us from that small company into a much larger company in essentially 18 to 24 months. So when someone as an investor comes and looks at us, they may look at the past, our history, our public filings, but the reality is, as one analyst said to me one day not too long ago, all of that is yada, 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 right? And the going forward is really what we're looking at and what you're doing. It's not that we're moving away from the residential business. In fact, we're going to be in resi, C&I, and utility scale. But the key note here is that's the reason why we were able to go from where we were to where we are so quickly.
Great. Well, thank you. That's a really helpful overview, and I would be remiss if I didn't mention that I peeked at your professional background on LinkedIn, and you have a great background for your role today. So with that, I'll turn it over to Eric.
Okay, thanks, Tim. And Ardes, thanks for joining us today. We really appreciate your time. So I know you touched on it a bit, but let's dig into the strategic transformation maybe a little bit more. So
Yeah.
you described NeoVolta's evolution from a Southern California residential energy storage pioneer into a multi-vertical platform spanning residential, commercial, industrial, and now utility scale manufacturing. So can you walk us through maybe a little bit more through the strategic logic of that build out? Why residential first, C&I next through Neubau and Luminia, and why utility scale manufacturing was the right next step rather than staying as a pure play distributor?
Yeah. So if you think about it, the genesis of our company was created back in 2018, and really a little bit before that. Some of our early investors, a group of people who were investing that ultimately invested in the company in the beginning, were solar developers who were trying to get into the residential space, and there wasn't a lot of opportunity. At that time, it was primarily Tesla, maybe LG, SolarEdge was dancing around. And that's how they got into it. This solar developer sent our co-founder and original CEO to a solar show and said, hey, what battery should I use? He came back and essentially said, here's the check boxes for everything. And nothing lined up with all the check boxes. And the developer said, I want a battery that does it all. That's how NeoVolta was formed. And that's really how it grew over the coming years. However, the company originally was really just focused on that. And quite frankly, the original CEO had a mantra that if he couldn't drive to the site, the customer site, he didn't want to sell it. So that really locked him into Southern California for the most part. And I think it ultimately, and he's still a shareholder today, but I would say ultimately the board was like, we need to go a little bit different direction. So when I came on board, the original thought was just to continue to grow the residential business. But I have an experience. I led North America for Tesla in 2015 and 16. And I really knew that there was another opportunity, particularly in the C&I space, with the evolution of the demand that we have on our grid today, and the inability for the grid operators and to be able to suffice the need and the growing demand. Storage is going to play a big play, particularly behind the meter in C&I. But ultimately, when we got that relationship with PotisEdge, they are a large tier one integrator who has really focused on the utility scale space. And LONGi coming in, that's a $10 billion a year revenue company. They definitely want to be in all the verticals themselves. We saw that opportunity to get in utility scale space. Will we do it necessarily on our own at the beginning? Likely not. But with those guys together with us, we felt that the timing and the opportunity was just right. And that's why our facility has the flexibility to do both utility scale and C&I. And we can talk a little bit about how we're doing that from a go-to-market. But that's really what drove us in that direction. And we felt with those guys, the technology risk and the pipeline risk were really mitigated in that. And for us, as NeoVolta, as the 80% owner of the joint venture, it was really about the capital risk, and we had to go raise that money, which we did.
Okay, great. Thank you. That makes perfect sense. So let's dig into that technology, or at least the manufacturing risk, a little bit more. So a common concern with new U.S. battery manufacturing is technology or manufacturability risk and standing up an unproven line. So you've said Pendergrass is essentially replicating an existing PotisEdge production line that you saw and was tested in China. So with LONGi as the strategic partner that vertically integrated into storage through the same relationship. So how does the lineage change the risk profile of standing up a new gigawatt hour scale plant in the U.S. compared with if you were just trying to do it on your own from scratch?
Yeah, absolutely. I mean, and quite frankly, if someone gave you a bunch of money today, you could go buy the tools and stand up your own factory, right? But you mentioned two things that are really important. There's technology risk and there's manufacturing risk, right? On the first piece of it, the technology risk, what we wanted to do, and particularly in the market of utility scale, the large developers and the banks and the customers, they don't like to have a lot of change very quickly, right? And there were a lot of opportunities to look at newer technologies, newer capabilities. But what was interesting to us is to be able to come to market with a product that was proven, a product that the customers understood and that they trusted could be done. The PotisEdge team, they have product all over the world, including here in the U.S. And what we did when we started talking to them is, guys, we went to their factory in China. We looked at their operations and we said, we want to do something that's very similar. We don't want to do new technology. Now, don't get me wrong. Our tools are brand new. We're not taking existing equipment that was operating per se. What we did is we ordered the new tools. They put the tools together. We went over. They proved to us that they worked. We did a factory acceptance test, right? And then they tore those down and brought them over. But in terms of the technology itself, it's a very understood and tried technology that PotisEdge, and part of our service and partnership agreement, they know how to operate. They operate it in the field. They put product in the field. They see product operating today, which starts to mitigate some of that customer risk from a technology perspective. But another key portion of that is the manufacturing risk. Now, I could go buy a line just like I did, and I could buy that same technology, and the technology risk in and of itself is fairly low. But the ability to manufacture it is another thing, right? And you've got to prove that. You've got to have the right quality assurance. And PotisEdge also brings that very strongly to the table. And that's what LONGi is leveraging when they did the acquisition, right? LONGi has a long experience in the solar industry, but relatively new when it comes to storage. And they believed in PotisEdge, and they're not a small player in this industry. So they are a big believer in PotisEdge's capability. They're going to come over. They're going to support us in the manufacturing in the beginning days. We have a huge team that's already here, not only from PotisEdge, but also from all of our vendors. There's a brevy of activity going on, a ton of activity going on in the factory today. And that's starting to not only be the installation and the startup and the operation of the equipment, but also the training of our employees. So we felt very comfortable with that. And they're not going to just put it in the ground, start it up, hand it over. They're going to be with us and support us over the coming months to ensure that we have the right quality assurance that makes our customers comfortable. And that's really what we're going to be driving at. And we'll be doing not only the operations, but third-party auditing, engineers coming in, testing it, making sure that the things are operating, going over our procedures, the typical things that you see from large-scale developers. And they'll be supporting us in that. And quite frankly, what they also bring to us is the QA/QC on our vendor list, right? They're supporting us as we go to qualify vendors, and we're utilizing a lot of the processes and procedures that LONGi already has in place for their vendors, and we're utilizing their people to do it. So that's where we feel very comfortable then versus someone. There are people today who are going out investing and putting in pack lines and say, hey, we can manufacture packs. There are contract manufacturers that say, yeah, you bring the tools here, we'll make the pack for you. But it's not really the history of the QA/QC that we feel comfortable with. And that was a strong reason why we decided to partner with PotisEdge. We had other opportunities, to be quite frank, but we felt very strongly about partnering with PotisEdge. And it only got more strong, if I can say it that way, when LONGi came involved.
Yeah, that sounds great. That sounds like a great plan. So let's turn to the FEOC compliance, so foreign entity of concern. So you've talked about the non-prohibited foreign entity determination.
That's correct.
Obtained with a leading law firm as the first stamp that developers and their financing partners look for before they'll even consider a supplier. And you're now working through all the bill of material level compliance work with KPMG. So for investors who aren't really steeped in the foreign entity of concern and IRA compliance mechanics, can you explain in plain terms what that opinion actually certifies for you and why NeoVolta Power was structured from day one to be compliant rather than retrofitted, and what doors does that open for you potentially?
Yeah, and as we said at the very beginning, when the new reconciliation bill, the budget bill, as they call it in Congress, came out, it created a situation where Chinese ownership in a company, and then ultimately Chinese materials in the balance in the BOM, so to speak, under a material assistance ruling, had a limitation. It had a very limitation. They did not want to allow a Chinese company's ownership or Chinese materials in order to receive the investment tax credit. You can still buy Chinese-made equipment and you can install it here in the U.S. It's not prohibited in that sense, but you can't participate in what they call the 48E under the IRS tax guidelines to receive the investment tax credit. We created our business such that we could do that under the rules. And what that ultimately means is they have to have a 20% or less ownership. That flows down to not only the 48E tax credits, but the 45X advanced manufacturing tax credits as well. but we created it from the very beginning. What's very interesting of creating it from the beginning, other companies have done this where they've taken two operating entities and they've tried to put them together. It's much more difficult once you do that, because now you have operating companies, whether they're Chinese or non-Chinese in the U.S., and you're trying to kind of cobble it together. It's not impossible, but it's been proven to be very difficult for some of these companies to get to a position. We started from ground zero, which was ultimately the smart way to do it. And we took advantage, quite frankly, and we were doing this with PotisEdge as a standalone partner, right? But we took a lot of advantage from what LONGi has already done in the United States under the solar side of the business. They have a very similar joint venture with a developer called Invenergy. They have a manufacturing facility in Columbus, Ohio that manufactures solar panels. Very similar setup. And quite frankly, it was not, they had it set up for the advanced manufacturing tax credit. When the FEOC rules came out, it required them to pivot what they already had, and they were able to do that. What's critical about that is that's essentially the cornerstone of our agreement. Our agreement is not we have 80%, you guys have 20%. I mean, that's the result of it. Our agreement is we shall be FEOC compliant. That's the cornerstone. So if the government were to come and change the rules, our structure would need to change. If they came back tomorrow, and we don't expect this, but if they came back tomorrow and said it needs to be 85-15, or it needs to be this, or it needs to be this, we, as an agreement, we have to make those changes, right? And so LONGi is very aware of that, and is willing to move. They're a very forward-leaning partner in terms of how they're approaching the U.S. market. I've been dealing with China for 15 years, right, at least, and there's a history of next administration, and I've been doing it since Obama was in. We've had vastly different administrations, okay, but the relationship in terms of the engagement in China has really not changed across all of those. In fact, the first anti-dumping AD/CVDs in the solar industry were put in place when Obama was the president, right? So it's not like a Democrat or Republican administration is changing how we deal with China. It's very similar. So the point of that is that we have a FEOC compliant plant. It was FEOC, we're not a prohibited foreign entity. We're finishing up our BOM with KPMG. In fact, we have some of it done. We're looking at several different BOMs because customers may say, I want FEOC compliant. Customer may say, I want domestic content compliant. The IRS came out with a subset to the ruling that they had that allows you to mix and match equipment under the maker rule. So you could have one fully domestic compliant box and one that's FEOC compliant, but you add them together, you can get to 50% domestic content. It allows you to do that. So we're looking at different BOM combinations based on customers' need. I wouldn't say it's dozens, but it's 2 or 3, right? So that's kind of what we're doing, and we're working through that today. But ultimately, being a prohibited foreign entity limits you, and being not one opens up the world, right? So that customers are looking at tons of opportunities. There's limited competition. More people are coming into the game. There's no question about it. But it is a very fast growing industry right now, and it's not going to stop over the next 5 to 10 years.
Agreed. So that's a great answer. Let's take a look then at the revenue opportunity for you. So with equipment roughly 85% on site and completion of plant commissioning expected in the near term, Pendergrass will move from a construction story to a production story. So can you help investors understand how to translate the 2 gigawatts of initial capacity scalable to 8 gigawatts into actual revenue terms? What should we assume about utilization in year 1 as you ramp through 2027? What's a reasonable revenue per gigawatt hour framework once the plant is running at design capacity? And then what would have to happen commercially to justify pulling the trigger on the expansion to 8 gigawatt hours?
You got it. Let's talk a little bit about the plant itself and that how you do expand, right? And then we'll kind of get into the revenue and the commercial pool to get us there. It's a 210,000 square foot facility. It's designed, the layout is designed to have 2 lines in it. Right now, we're just dropping in the first line today, right? On a single shift operation, which really means about 40 hours a week, right? We're not talking 7 days a week. We're not talking 10 hours. We're really talking a 40 hour a week operation. We can do up to 2 gigawatt hours. If we go to a second shift, we can go quickly to 4 gigawatt hours, okay? And what that means in terms of personnel, the plant, when it starts to operate, will have about 85 people to make the plant operate, not just on the line, but also from an administration perspective. To go to 4 gigawatt hours, we need to add about 30 people. That's what we need. Okay, so it's not a big lift to get to that 4 gigawatt hour, and I'll talk a little bit about how we're going to get there in a minute. And then to get to the 8 gigawatt hours, we ultimately need to drop that second line in. You know, from a capex perspective, we've been saying somewhere in the $13 to $15 million range for that second line, and that we could rinse and repeat in terms of single shift, double shift, and then get up to 8 gigawatt hours. And I like to say 8 gigawatt hours plus, because the way that we look at it in the United States versus China, China talks about capacity, but their utilization is generally 30 to 40%. In the U.S., in order to compete, you know, your utilization get up to 90% in terms of how you operate. And that could be up to even 3-shift operation. But we're trying to build conservatism into this right now. Single shift, double shift, second line, single shift, double shift, can go from 2 to 8 gigawatt hours. In terms of how we ramp to that and what the revenue looks like, ramping to that is we start, as you said, right, and we're still on pace to do this, to get everything installed. And at that 85% number might even be a little bit less now in terms of the percentage, or more now in terms of percentage of equipment on site. And quite frankly, I had a report just the other day saying nothing that needs to be delivered could stop us from producing at this moment, right? So everything else can do that. It just maybe a little bit less efficiently until we get the final pieces in place. But everything feels like it's on pace right now to be at the end of August, to be starting to put production and ramping up. That ramp up is, we have some conservatism built into that. We actually have conservatism built into ultimately conservatism was built into the start date, or the commissioning and startup date, to be honest with you. Early on, I saw numbers that were a few months sooner. I didn't feel comfortable with that. I've been around several manufacturing facilities, and I said there's always things that can happen. And some things did happen, you know, generally outside of your control. It's city permitting, tenant improvements, things of that nature, not really the line itself. But everything's working, everything's going to plan. And like I said, there's a host of people and activity going on in the factory right now. We feel by the end of August, we're going to be up and we're going to start running and producing. We have a slow ramp up period, and we think by the time we get to what I'd call middle of next year, we'll be to the 100% 2 gigawatt hour run rate, right? That's kind of what we're looking at. We have some analyst reviews out there. We have some reports out there that show somewhere between this July and next July, which is or June and June, which is our fiscal year. We're actually just started our fiscal year. We're looking somewhere in the neighborhood of 600 to 700 megawatt hours. And then by the time we get to that second half of next year, calendar year, we'll be looking at the full 2 gigawatt hours. So that would roughly translate to an additional gigawatt hour in the second half of next year without any kind of ramp up. Now, anywhere along that line, anywhere along that timeline, based on the commercial demand and our ability to move, we could start adding people. We could start adding a shift. That's not a difficult thing. That means just keep operating. Instead of operating from 8 to 4, we go from 8 to midnight or something like that, right? So we have that capability along the way. But that's how we're looking at it. We're looking at it to where we're going to go between now in the middle of next year to get to full ramp. And I would tell you there's conservatism built into that, but also ultimately how we're working it. And in terms of revenue, how you look at it right now, you could see somewhere in the neighborhood of $170 to $200 per megawatt hour, actually a little bit higher. And when I give that range, it kind of depends on the application, the size of the overarching system that you're going to deliver to the customer. So the number, you know, there's economies that they can support maybe that 170 number versus a little higher number, and the mix between C&I and utility scale. C&I is a little bit larger revenue. We're seeing in anywhere from the 240 to 350 range of per kilowatt hour, and that's about 25% of our mix right now, right? Is how we look at it. Once we scale up from 2 to 4 to 8, that percentage will get less because we believe in the early days that scale, that ramp up or scale to 8 gigawatt hours will be driven by the utility scale market. But that being said, we're looking at somewhere in the neighborhood of 170, 200. And if you think of that on each gigawatt hour is 170 million to 200 million. So if you think about it from that perspective, getting into that 1.5 gigawatt hours between now and the end of next calendar year, you do the math on that, call it 170 to 200, you're somewhere in the $300 to $400 million of revenue. And then you start ramping, you could obviously do the math there.
Okay, great answer. Thank you. So let's just take a look at the total addressable market. So I think you pointed to market size potentially around 45 billion
Yeah.
of
Yeah.
combined U.S. utility scale, residential, commercial, industrial, and financing and services
Yeah.
TAM by 2030, with utility scale alone potentially being about 20 billion. So
Yes.
against a 2 gigawatt hour initial footprint that's scalable to 8, how do you think about sequencing which of those verticals fills the factory first? And what has to happen, I guess, and you touched on it a little bit, for you to credibly capture a meaningful share of that market size?
Yeah. I'll kind of start with residential because it's not necessarily the factory and that piece of it, but I think it's important for listeners to understand is we're not necessarily moving away from the residential market. The changes in the tax laws have now moved away the individual's ability to capture a tax credit as an individual tax owner, right? So before the end of last year, you could file against your own homeowners, your own personal taxes for as a homeowner, and take the credits for installing solar and storage. That has gone away. It's called the 26D under the IRS guidelines. That has gone away. What's already been in place and it remains is the financing mechanisms, like the third-party ownership models. We also call it TPO, the TPO model, third-party ownership. So in that sense, that market remains, but we recognized as a company that as a manufacturer, you're kind of beholden to those finance platforms. And while we love those platforms and continue to want to participate on those platforms, we also wanted to control our own destiny. So on the residential market, and ultimately that will translate into the C&I, and I'll talk a little bit about that in a second, is that we are forming our own TPO model. So we have a prepaid PPA that we just began to launch. We haven't really come out per se, but we talked about launching our own model. I feel very, very secure in the fact that that's going to get done. But that we think will help multiply a lot what we're doing. Many of the analysts aren't giving a lot of credit towards the residential play right now. So it's not like I can replace residential with utility scale, but at the end of the day, we feel that market's still going to continue to be strong. That manufacturer is a little bit different. Then we go over to the factory. The factory's got the C&I and the utility scale, right? So those markets we think are going to grow rapidly. We talked a little bit about TAM, and TAM is in dollars, right? And then we talked a little bit about capacity, and capacity being in gigawatt hours. The way that I would translate it is we're building a 2 gigawatt hour to start facility in a market that's 40 to 60 gigawatt hours on utility scale, right? And the C&I is somewhat less, but we think it can get up to 4 to 10 gigawatt hours as well. But in that sense, we're trying to capture 2 to 4 gigawatt hours with that first line on a 50 to 60 gigawatt hour market. Many of those are driven by big hyperscalers, data centers, things of that nature, but a large majority of what we call the tail is coming directly from utilities, solar plus storage developers, and we're really attacking those guys in the near term. A lot of the hyperscalers, you obviously, some other players, Tesla, Fluence, are engaged with those guys, and we're talking to data centers as well. We're having those conversations today about how we can support those. But at the same time, we're looking at a lot of different opportunities. So we feel the lift to get to 4 gigawatt hours is not very difficult. And we think that the demand is going to grow somewhere up to 100 gigawatt hours in terms of energy storage in the coming years. And that kind of reflects in that TAM number that we were talking a little bit about. So the TAM growth across all platforms is 45 billion. That's, put out by other analysts. We just, capture that data. And you just talked about the financing piece of it. We're utilizing that financing piece in the residential, and we're also looking at it in the C&I space with our partnership with Luminia and some of the stuff that we're doing with them. But again, for investors to understand, it's not like we're trying to go capture 20% of the market share, right? We're really looking at a 50 to 60 gigawatt hour market, and 2 gigawatt hours gets us from a $10 million company to a $350 million company pretty quick.
Right. A lot of runway. So let's just, you mentioned Luminia, so let's just take a look at that relationship. So they've already produced a $1.9 million first purchase order for 40 FEOC-compliant commercial and industrial systems.
Yeah.
So inside a broader framework that I think you've said could be up to 160 megawatt hours and roughly $39 million of potential equipment revenue. So what gives you confidence that the remaining framework converts into orders? And why do you see commercial and industrial as particularly attractive margin driver alongside the higher volume utility scale business?
Yeah. I'll answer the second question first in terms
Okay.
of that look. If someone was looking in this industry and they've looked at solar and they've been involved in typical renewables, you would know that the three verticals, resi, C&I, and utility exist. And solar, residential, and utility scale were a big player. C&I was a laggard, right? They didn't really produce as much in solar. And it's because most energy consumption doesn't necessarily fit the profile or the fit of putting solar on. It's much different when it comes to energy storage. Energy storage is definitely something that the customer can utilize. And under the right financing platform, they're going to be saving money day one. And it's not a heavy lift relative to putting in a solar plant in terms of overarching costs for the benefit of it. So we think that there's going to be a major play for C&I storage. And the relationship with the utilities in this case is less antagonistic, right? Solar behind the meter, very antagonistic relationship with the utilities, whether you like it or not. It's been very difficult. Storage, they're very in line with it. In fact, many utilities are giving lots of incentives for that, which led us to the conversation with our partnership with Luminia. Luminia is a developer of solar and storage applications, right? But they have a creative way of going to market. They don't just go develop deal by deal. They do it more programmatically. And that first order that we got was against a program that they got in California. There is a program called Community Choice Aggregators, right? So, and where the big IOUs, San Diego Gas and Electric, Southern Cal Edison, and PG&E sit, there are other opportunities for consumers to participate so they can have a choice, an option. And this community choice, these aggregating choices. There's, I think, 20 to 25 of those in the state of California. They happen to get a partnership with one of them in San Diego, one of two that are in San Diego, and they're looking to replicate that. But these utilities have a vast need for energy storage to support the ever-growing infrastructure and the aging, transmission and distribution that's existing. They need the batteries to level it out. So we see a large opportunity in the C&I space, and there's a large beginning demand. And it's not only driven from the customer being the business, but it's also being driven by the utilities, right? So there's a lot of incentive programs that are out there. On top of the investment tax credit incentive that comes with it under a leasing option, there's a lot of opportunity. And what we're bringing to the customer is the equipment and the leasing capability, right? So we're bringing the financial platform as well as that. So we're big believers in that.
So, Ardes, you've laid out a really compelling story. So, just as a last question, we just have a couple minutes.
Sure.
What milestones should investors be looking for to see how the story is playing out? What should we look forward to over the next few quarters?
Yeah, quickly, I think the most important thing that people should know is as we complete the facility, complete the installation, the startup, the commissioning, we'll be talking about that. We'll be announcing that. So factory going from construction to production, as you said earlier, it's a great way to look at it. So completion of construction, production, and inside of that window, purchase orders, right? Getting our first orders in. Those are the key milestones that I think investors want to see. We start building up strong backlog. We start producing product, and we start moving that, shipping that to product and generating revenue. Those are going to be the big stories over the next coming 2 to 3 months.
That's great. Ardes, thank you very much for joining us today. As Tim said, you have a great background. You have a very compelling story. It seems like you guys are in a really interesting place, kind of at the right point in time. And we look forward, would like to stay in touch and see how the story develops over the next coming year. And I just want to say thanks again for joining us. And with that, Tim, I'll turn it back to you.
Thank you, Eric. And Ardes, thanks so much for sharing the NeoVolta story with us today. I agree with Eric. You have some exciting milestones ahead, so feel free to reach out and come back on the podcast when you have more exciting news to talk about.
Would love to, Tim. Eric, thank you guys. Have a great day.
Thank you for listening, and do not forget to subscribe, as well as visiting www.watertowerresearch.com to stay up to speed on the WTR on the Horizon written research reports, podcasts, fireside chats, industry-specific symposiums, and conference schedules. We will see you next time for another edition of WTR on the Horizon podcast. Finally, a special thanks to the producer and editor of the podcast, Krista Fitzpatrick.